Good afternoon, everybody, and thank you for joining us today on what's a slightly overcast day in Port Louis. So thank you for joining us for this afternoon's session, which is the challenging world of financial crime. Just before we begin, just a housekeeping. We would like to encourage you all to submit your questions to today's panelists. You can do that using the Q&A function, which is built into the Zoom interface, and as you can see, is at the bottom of your screen. If your question is addressed to anyone in particular, please do indicate in the question for whom it is directed, and we will be addressing questions towards the end of the session. So without further ado, I'd like to start our discussions on the challenging world of financial crime. And I'd like to introduce today's moderator, Mike Rees. Mike, would you like to say hello to everyone and tell them who you are? Thank you.
Hi, Lisa. Thank you very much. I'm Mike Rees. I am chair of the board of the FinTech Association in Mauritius. In fact, I was one of the people who helped to set it up. And I've spent 40 years working in financial services. More latterly with ING Bank and even more latterly with Travelex. So I've spent a lot of time getting involved in financial crime and the issues around that. So today we've got a great panel. So let me ask them to introduce themselves. So perhaps I can pass over to Neeraj to introduce himself.
Thank you, Mike, and good afternoon to everyone. Well, I'm anti-fraud officer at the State Bank of SBM Mauritius, and we at SBM have a dedicated department looking at fraud matters. I have been very passionate about financial crime for a long time now. I started off my career as a corruption and anti-money laundering investigating officer in a local law enforcement agency. So that dates back to almost 16 years now. And during that time, I've been basically in the banking and financial services industry. So my interest on financial crime and related matters is being top of my agenda. I'll pass on to Kevin.
Kevin, I think you might be muted.
Mic is muted.
Yes, the usual thing. So, hi everyone. Good afternoon. So, from my perspective, 15 years of experience in banking and finance, and so from my side in ABSA, we look at different security departments. So, fraud is included there. We have the forensic team. We have the data privacy team. We have also the information security. We've got also the resilience and what we call cyber prevention. So all this falls under one office, which is called the Convert Security Office, which I manage. So 2 years back, I was also managing the financial crime operations team within ABSA and previously Barclays. So happy to share my experience with you, and I'll be keen to also share what's happening in the banking sector. So looking forward to this conference. Thank you.
Good afternoon to you all. Thanks, Mike and Lisa, for organizing this interesting discussion on financial crime. So on my side, I'm a seasoned banker, 30 years of banking experience, and I've been 10 years at management level. I can tell you, in terms of experience in banking, I have been discussing many with the risk and compliance team with all the issues that we have been experiencing. So basically, I'm more on the sales side and product development, innovating quite a lot in terms of the electronic transactions. And then I took a challenge and I joined Global Primex Limited. It's a FinTech company, a RegTech company. I think I'm sure we will be able to contribute in that forum. Thank you.
Okay, thank you. So let me give maybe a 10-minute introduction to some of my thoughts on the subject, and then we're going to turn over to the panelists for their views on some of these issues, and particularly we'll then focus on your questions. So as Lisa said, very keen to get you to contribute questions to the debate. But let's start. Why do we call this the challenging world of financial crime? Why are we focusing on it? Well, this is a major societal problem where unfortunately the criminals are currently winning. And that's because they're operating against a fragmented financial system in an increasingly digitalized world. And that is all manna from heaven for them. In addition, I believe this is a major long-term threat to the Mauritian economy, specifically to the financial services sector in Mauritius, but actually it has very broad implications for the broader economy. This is a big issue. So let me talk on why is it a societal problem? Some of the crimes that go on through financial crime are absolutely horrendous. Human slavery, child exploitation and abuse, terrorism, trading in wild animals, drugs, the list goes on. These are truly dreadful crimes. And as I said, it is a war because the criminals are becoming more sophisticated. And now we're seeing more, for example, trade-based money laundering schemes going on. And it's the structural flaws that are being in our system that is being exploited with this increasing sophistication. And the more sophisticated we get, the more sophisticated the criminals get. And if you just want to understand the breadth and depth of this problem, I would encourage you to look at the websites for things like the Wolfsburg Committee or the Global Coalition for Fighting Financial Crime or Financial Crime News. And there was a lot of noise recently about the Fincen Leaks, about the suspicious activity reports, the SARS, that got leaked by Fincen. The reality is, the challenge there is banks are actually doing their job in identifying and raising these suspicious activities. The big question is, how many prosecutions resulted from those SARS? And to give you an example of why the criminals are winning, less than 1% of the SARS globally actually end up with a criminal prosecution. But it's not only the victims of crime that suffer from this financial crime, it's broader. So, for example, in an increasingly digitalized world, it's very important that we have bank accounts. And so what this means is that through KYC and all the challenges around that, it's more and more difficult for people to get access to banking accounts. And so you get financial exclusion going, it's directly creating financial exclusion increasingly from a digitalized economy. But it's also creating financial exclusion for countries. There are many countries in Africa who cannot get correspondent banking relationships. And what that means is they are not connected to the global financial system. And it's not good enough for regulators and government to say, oh, it's just about enhanced due diligence. The cost and risk to banks taking on these local banks as correspondent relationship just doesn't work. And so how do we address this situation? And I think there are three key areas that needs to be focused on. The first is regulatory compliance is an absolute minimum. Now that's easily said because the challenge is the regulatory bar is going up as the crime level goes up. And we're seeing in Europe, for example, MLD5, MLD6, we're seeing the EBA, we're seeing FinCEN issuing new requirements. So the challenge of regulation, the bar is going higher. And we've got to sustain the ability with compliance so that ever increasing bar. But that's not just the issue. The breadth of regulation is already increasing. So in the US and UK, for example, estate agents selling property have to do diligence on source of wealth for buyers and sellers of property. In the UK, it's over £2 million. That means estate agents need compliance teams. Car dealerships are no longer in Europe allowed to sell cars for cash. It means they need compliance teams. Gambling industry, online betting have been fined for KYC issues. The horse racing issue, fraternity is increasingly regulated. So saying regulatory compliance is a minimum has a real challenge because the bar of what that minimum is going up and the breadth who's caught by that regulatory network is also going up. The second theme is we can only solve this through collaboration. And it means collaboration in many aspects. It means between banks. It means the ability to share information, because criminals at the moment can mum and dad us between banks because we're not allowed to compare information. So bits of transaction can go between various banks and we can't see the whole picture. So there is a need for increased information sharing, and the Wolfsburg Committee is working on how do we look at the standards for information sharing against the backdrop of privacy of data requirements. At a national level, we need public-private coordination and investment for financial intelligence units. People who can actually combine data from different banks, look through it, and understand what needs to be prosecuted. At the moment, as I said, less than 1% of the SARs globally end up with a criminal prosecution. FIUs are at the start of their journey. That collaboration and public-private relationship around FIUs is critical to be resolving this. Banks individually are spending a huge amount of money, an increasing amount of money on compliance, but it's not being effective because of that lack of collaboration at a national level. And then lastly, we need collaboration at an international level. In Europe, we're seeing it with the EBA taking a pan-European role now on financial crime. But we need to see more international collaboration because that's a structural weakness. And the third issue is the use of data. A huge amount of money is spent in banks at the moment on identifying false positives. They get thrown up by the system, each has to be investigated, and there's a huge wastage of time on false positives. And as I said, with the sophistication of the criminals going up, we're just seeing more and more false positives. And so we're seeing an increased use of data science and criminologist teams to help tackle this problem. People like Citibank and Bank of America are at the forefront of this, who are probably at a more mature stage than many global banks. And they have shifted their balance away from most of their effort being on KYC, CDD, and risk assessment to more on transaction monitoring and post-transaction monitoring and developing scenarios for trapping transactions. So I hope I've painted a picture for you of a pretty negative world, and that's intentional. And in this world, gray is a shade of black. It is not a shade of white. And Mauritius is in gray. No, it's not, it's black. In Europe, that's a question of law. Gray legally on FATCA is actually black under European regulations. And for banks, it's the same. It's an asymmetrical risk between correspondent banking relationships and the cost and risk of actually managing this situation. Global institutions, financial institutions were fined $5.6 billion last year for financial crime. And the fines in the first 6 months of this year were bigger than the total amount of the fines last year. You look at ING's fine last year of $800 million, euro, sorry. You look at Westpac's $1.3 billion for child exploitation and terrorism. These are huge amounts of money. And this year, we've had 2 Sri Lankan banks fined. We've had 5 Kenyan banks fined. We've seen online casinos fined. We've seen estate agents fined. This is a growing problem against a growing situation that's happened. And the pandemic has actually made it easier for the criminals. More and more is being done digitally. The quality of CDD is being challenged by having to work from home. Economic stimulus packages are the target of fraudsters and criminals. And increasingly, we're seeing the use of the unregulated sector for financial crime, like cryptocurrencies. So we often talk about the new normal in working post-COVID. I believe we need a narrative about what is the new normal about dealing with financial crime. So, Niraj, can you add your perspective to some of those issues and your experience, please?
Thank you, Mike. Pretty bleak picture, but I think we all agree that this world of AML CFT that we are operating in is getting a lot more complex, is getting a lot more demanding. You've laid out a lot of those points that regulatory obligations in terms of AML CFT requirements are increasing, and that banks being at the heart of the whole money process have a lot of responsibility in how far they tackle that. Now, we have been traditionally looking at matters in a context where you had cash transactions, and then it got into a more digital world. And today, the essence of what we're looking is an it's not over, but it is an increased and very, very rapid adoption of digital platforms. And with that, you get the increase in the volume of transactions we have. We get an increase in the complexity of transactions we're facing and the speed of transactions we're having to process. The exigencies of clients today require us to respond as fast as we can. There's a customer service level expected. So the banking industry as a whole is expected to respond to that. Now, while we're trying on one end to facilitate all of that, obviously we have to balance on the other side the regulatory obligations that are imposed on banks. So with all of this, I think you've raised a number of matters. So obviously you mentioned that there is an issue regarding the effectiveness of suspicious transaction reports that are made. As banks, what we typically look at is platforms that we have that enable us to track transactions, to identify those outliers, and with all of the resources that we try to put, obviously comes with that the cost of compliance. And I come later to that regarding how probably that impacts financial inclusion, and probably where Mauritius may not be so much lagging behind. So we have this obligation of trying to invest more and more. Transaction monitoring systems are evolving to try and keep track with what's happening. But let's face it, when we're doing transaction monitoring, what we're actually doing is trying to identify known types of transactions. So we model things out of issues we have identified. To whatever extent we can, we try to predict what can happen, but fraudsters try to stay a step or two ahead. Now, if fraudsters are trying to stay a step or two ahead, and we are kind of more reactive than proactive as an industry, because obviously there is only so much you can try to predict will happen, and the fraudsters are always using the gaps in the systems or coming up with new ways of laundering their money and kind of keeping the illicit transactions uncovered. So there is a big issue that we face as an industry. But I think the good thing is the banking sector in Mauritius, we do realize our responsibilities, and we try as a whole sector to address those as effectively as we can. I think I'd like to make a point regarding financial exclusion or financial inclusion. I would like to refer to it. There is this debate around AML-CFT requirements kind of going against the concept of financial inclusion. Now, I think in Mauritius, we probably kind of sit on the right side of the fence in here. I think what we've seen is we've got a very high bank population. We've got, I got the statistics I could find were figures dating back to 2014, where the population aged above 14 years, we had a bank population of 82%, which was a global rank of 39. So, and we were above a number of G20 countries in our ranking. So I think if we have been able to achieve a very high penetration in terms of banked population, we do not have this issue of financial exclusion. We have banks in Mauritius have typically adopted the go to the client approach. So we are a small country. Let's make the most of what a small country can give in terms of less trouble. You know, if we look at an African continent, probably Kevin might come back to that later on. But Mauritius being small and banks being so decentralized to offer their services, and with the adoption of digital platforms, with a high penetration of technology and connectivity around the island, at least if there is one thing which is not so much of an issue, and where we just need to keep it going, is that we have a high population of bank people. So that allows banks then to focus their area of attention to ensuring that we do. I mean, you refer to it as the minimum requirement is complying with the regulatory norms. I think that we are comfortable doing that. And if I can also say, a number of us probably do go the extra mile in trying to make sure that we do not overexpose ourselves when it comes to AML/CFT matters. What that probably translates to even is that, yeah, we might probably be over-filing STRs. That's a trend that is seen globally. How effective that model is. Obviously, as an industry, we need to look at the effectiveness of STRs because it's one of the most effective tools we can have, where there is enough data sharing and there is a proper collaboration that enables SARs to be able to pick up on matters of importance without being distracted by the false negatives. Other than that, I think what we're looking at is also this issue of an increased adoption of cryptocurrencies. I think we are yet to really penetrate that segment in Mauritius to the extent that some other jurisdictions have. But we need to be aware of how things are happening. Now, today, obviously, cryptocurrencies are not just another mode of payment. It's also a digital asset that people invest in. You know, surprisingly, as much as we try to promote or proponents of digital currencies try to show it as an alternative where probably there is lower risk of money laundering. There is the other side of the coin where you have the dark net that try to use the cryptocurrencies for other purposes of facilitating illicit transactions. So with that level of complexity coming in the industry, that certainly poses serious challenges in terms of regulatory requirements. We've seen, and if we follow things how they happen globally, we've seen exchanges dealing with cryptocurrencies also looking at the KYC. So you know, if we get things right, and I think it's the small bits and pieces that we need to tie in together that will, as a whole, enable a more effective AML/CFT compliance regime to operate. That would go quite some end. And I do want to believe that in Mauritius we have and are doing things in the right direction. And as I said, we've got those kind of characteristics and traits of the local industry that allow us within this small economy to be able to do things right and hopefully maybe even set the example for other jurisdictions. So
Neeraj, can I ask Kevin to build on some of those themes, please?
Yeah.
Thank you. Kevin, you're on mute.
Yeah.
Sorry again. So
okay. Yeah. So from my perspective, I think my world my world is more on cyber and fraud prevention, and where my world meets the financial crime is more from a digital perspective, and where criminals have become much more sophisticated. So they are using those channels of new systems and digital e-channels, for example, to do the damage. So from a banking sector, the simple way things work is that we would identify risk within the organization, and then we would decide on the controls that needs to be applied, and we would test those controls on a regular basis just to ensure that things are working well. So what we've seen from our perspective, and when I say our, it's not only from an ABSA perspective, but also from the banking perspective, we've seen that there are a number of emerging risks coming. And I think Virat just mentioned one thing, which is in terms of the dark web. So I'll just explain what I'm trying to convey here. Is that, on the dark web, you have a number of artifacts that are available. And we used to think that, people like hackers or like fraudsters would be nerds and people very technical to be able to commit those kind of financial crimes. And you would be surprised to know that this is not the case. Even a 14 years old adolescent can do hacking today with the tools that they have on the dark web. So why I'm highlighting the dark web is that you could get fake documents there, easily be made for you, like your passport, like your driving license. And those are things that in the banking sector, we rely on in terms of a KYC perspective. So if you're getting these artifacts today, free, I wouldn't say freely, but for a small amount of money, and which is done in such a sophisticated way that it is very difficult for the banking sector or the financial sector to identify those fake documents, then it becomes very complicated for us. So I'll just take a couple of examples. Is that within the last 2 years in the banking sector, we've seen an emergence of fake statement. And fortunately, banks work together, and we share with each other, and there is a collaboration with each other in terms of checking those statements. But where it gets more complicated is when the banking or the bank is dealing with offshore companies. And then you need to go to those other financial institutions to check those documents. So from a financial crime perspective, this becomes, I wouldn't say impossible, but it becomes very complicated. We've got instances where we had fake statement, we had fake KYC documents that was confirmed by those other financial sectors. In country, we've got an emergence of, for example, bank guarantees. And I know that even the regulator has asked all the banks to increase the level of security in the bank guarantees, the paper that we give to the customers. So all this is becoming emerging risk today, and with the sophistication that is available on the dark web, on the internet, it is becoming more accessible to people. The second emerging risk that I would like to highlight, which has a direct impact on financial risk or financial crime, is the people risk. So what's happening today with the sophistication of systems, and I think Viraj touched on that, in terms of AML, alert monitoring, and RegTech systems that we've put in place, especially in the financial sector, it has become even more difficult for fraudsters to commit their crimes. So what they are looking at today is looking at the person now, not the system, not trying to fool the system or the process, but trying to fool the person. We've had instances where people have been offered loans, credit facilities over WhatsApp or on social media. And you would be surprised to know that those people are targeted people where, for example, retired persons or people in financial stress. So they would use those kind of opportunities to commit their crimes. And what happens there, they would ask for the KYC documents. And those KYC documents that are submitted to them are then reprocessed in a certain way that they can be reused for other scams. So people risk is one of the emerging risks that we've seen in the banking sector. We have other things that are related to people risk, like impersonation. So we have, for example, emails being impersonated, emails being hacked. We have phishing emails. We had one recent case where there was an impersonation of an email for payment instructions in this banking sector, so which has caused huge loss for banks within the country. So all this is becoming even more difficult now to track and to ensure that controls are in place. So where I think banks need to focus more is on automation. So instead of putting the reliance on people to do some checks, automation and digitalization is important for banks or for the financial sector to be on top of, so that we don't rely on people to be doing some regular or some robotic checks. So we will rely on people more for analytics and based on their assumption. So this is where we from a banking sector, I believe that we need to move forward so that we can be at par with those fraudsters working in that sector. Because as Niraj mentioned, they are always one step ahead of us. And one thing that we need to also ensure is that you will always have frauds. So you cannot eliminate frauds completely. You will always have cyber attacks in the financial sector. What needs to be implemented is the response capability. So the financial sector need to work on a strategy that they can respond in a timely manner to those attacks or to those scams. And this is where we will lead the way and win that battle. Okay, thank you, Kevin. By the way, picking on Kevin's point on people using people, if you want to understand the depth of that, go and look up on Google money mules and what's going on about money mules. I'm not going to go into it now. You can just go and look at that at your leisure, because what I want to link to is I want to link into Viren, who is trying to help solve the problem, working for a FinTech and using data. So I'd like his perspective on some of the potential solutions to these problems.
Thank you, Mike. Thank you, Mike. My point would be more on the global perspective, because we are actually operating on the global business side. And this is where I think the pain point lies today. Mauritius being in the gray zone, as you mentioned, and on the EU blacklist. What we have seen, there are two things that we have seen in terms of cybercrime, basically in terms of electronic crime, I would say, and as well in terms of money laundering and terrorist financing, including the drug trafficking. What we have seen, like, you know, in terms of hackers and scams that keep on growing, like in terms of malware, we have seen so many malware that has attacks that have happened at banks. We have seen, as well as Kevin mentioned, collusion of internal staff and external staff, right? We have seen also in terms of there is not a concise way of reporting of suspicious transactions, what we have seen as well. In terms of data management, in terms of KYC, as you mentioned, Kevin, there are various sources that we are obtaining information today. Makes it difficult to get, as you said, to track the right positives. And also in terms of, we have seen as well, small transactions, continuous small transactions that has happened, and where banks are unable to track these type of transactions. So this is where Fincen as well is coming down in terms of the tickets that are being tracked today in terms of for terrorist financing and other things. So these are the things that we have seen basically in Mauritius, and we feel that this is going to become more and more acute. You have heard about the concept of open banking that's coming everywhere. So this is going where banks are going to open their database to all financial institutions. So this is going as well in terms of cryptocurrency, as you mentioned, in terms of digital currencies. We shouldn't confuse with digital currency and cryptocurrency. These are the things that are coming and making things very acute for banks. So this is where I think we need to address these pain points and try to see in terms of technology what can be brought forward in terms of data, in terms of security, to stop all these issues. But the other things as well, we have seen that in terms of technology, artificial intelligence and machine learning are the things that today that banks are exploring in terms of getting the right information, the right data to be able to track all these issues. As regards to the response of Mauritius to the grey list and to the blacklist, I think what we are coming is more on the risk-based supervision in terms of as well a closer supervision of all the global business stakeholders. And we have seen as well there is more empowerment to authorities, to local authorities. There is as well a way to facilitate global cooperation across the sector, right? And also in terms of where we get our information, the right data for us to explore, to get our information. And the other thing as well, in terms of keeping pace with the AML and CFT, I think this is very important for us to be in line and as well be in line with the other regulatories. So basically, I have given a way in terms of Mauritian perspective, what's happening more on when they're working with the global business, and this is my point of view as with my thoughts as regards to financial criminal offences.
Thank you, Viren. Let me maybe now some very good comments and hopefully insightful for you. Let me turn to some of the questions now. And Jovin, you're asking some questions about, well, if collaboration is basically so obvious, why doesn't it happen? I'm going to ask our panelists for their view at the moment, but let me say a few introductory remarks to it. Part of the problem at the moment is, and a couple of the panelists have said that, is, the problem at the moment is banks are throwing people at it. The solution at the moment is throwing people at it. And so banks are so overawed by just the physical effort of what we're trying to do. I went to a financial crime service center. The number of 1 cent transactions coming through the system where criminal people are trying the system. They use a 1 cent transaction, and if that gets through, so you've got to sort all those out. And that's purely people, because we're not sophisticated yet with the technology solution. So part of the problem is a lot of the response of the banks is just throwing people at the problem. I think the second problem is we're then restricted. So I think, as Niraj and Kevin both talked about, banks talk about the scenarios they see going on to try and anticipate. And there is a lot of collaboration going on that. The problem is the collaboration isn't allowed on data sharing because of data privacy rules. So the FIUs, where they exist, can't actually take a SAR from one bank, combine it with a SAR from another bank, because the data privacy rules, particularly in Europe around GDPR, prevent that. So, there is a certain amount of collaboration going on, but it's overawed by the physical effort of what's going on, but also by the legal framework. And thirdly, I can't remember whether Mauritius got an FIU, but in most countries, the FIUs are sorely under-resourced. So let me just maybe hand that back to the panelists and for any comments they want to add on that.
If I can add to that, thank you, Mike. If I can add to that, I think, as rightly said, we expect the fight regarding AML, CFT, regarding money laundering and terrorist financing to be a truly global thing. But let's be very candid about this. We are in an increasingly deglobalization process. You see a retreat from multilateralism. So these are the realities of the global economy, and increasingly you will have national interests probably prevailing over global interests. So with that perspective, I think that adds to exactly what you said, Mike. That we have data privacy issues. We have the volume of data that we have, but we also probably have a more deepening issue where maybe the collaboration doesn't necessarily happen as naturally as one might probably expect.
Yep. Kevin or Viren, do you want to add to that?
So basically, as I mentioned today, in terms of exchange of data, this is going to be difficult especially with the, as you mentioned, with the GDPR. So the point today is that we will need to depend on technology. And what we have seen is that there are two things that are coming and that the banks will need to be aligned. It's about artificial intelligence and machine learning. This is something that will need to grow in the years to come, and where we should be able to come out with some true data with respect to these crimes.
And you know, there's some questions going on about who polices all of this. Well, you know, regulators clearly hold banks to the regulatory standards that are going on, and that's why we're seeing a lot of fines going on. But the regulators themselves are challenged by how they develop the regulation, and you know, and then as they develop the regulation, what happens to the SARS and everything else? Because at the moment, you know, in Europe, there's over €1 billion spent by European banks on KYC AML. Does that result in the level of criminal prosecutions that should come? Absolutely not, because the FIUs are not in place. And a question from Uvesh on systems. I would say that typically banks start on this journey, all the focus is on KYC systems, CDD systems, and risk assessment. So most of the sophistication is on that, and systems are on that. The sophistication on transaction monitoring, and I think as Kevin and Niraj alluded to, on post-transaction monitoring is very rudimentary and at an early stage. So, you know, the balance of the efforts at the moment is on the risk assessments of the individuals, not the risk assessment of the transactions going through. I don't know if any of the panelists want to add on that.
So just wanted to add something quickly in terms of, you know, the regulations. So we've seen sort of fintechs trying to exploit where there is little regulations or no regulations. So if we take the example of peer lending, for example, okay, so that's the new norm that we can see on the market in terms of peer lending, and we don't have much regulations around peer lending. If you talk about wallets, for example, e-wallets, and where money is being transferred from an account to an e-wallet, and from that e-wallet there are expenses being done or money being transferred to XYZ. So there's not much regulations around that, and this is where I think focus should be put on, because from a banking perspective, and Niraj would agree with me on that, is that it's highly regulated. We tend to believe it's overly regulated at some times, but it's done for a good cause. So as you mentioned, the transaction monitoring, defining the risk of each customers that we have and reviewing that customer on a regular basis to ensure that everything is in order, whether from a KYC or from a structure perspective. So all this is highly regulated. The risk now is being put on non-regulated areas, and especially those two that I've mentioned.
Niraj, do you want to add anything to that?
No, I think Kevin's covered it pretty well. We are trying our best, but obviously, I think what we can try and do is obviously increase our competencies in terms of technology, because of the limits that we have and the speed with which and the volume with which these transactions are being processed nowadays.
And so there's a question on FIUs as well about collating information in a timely manner. You know, so you're right. I mean, the collection of SARS is very rudimentary as well. A lot of them are paper-based. And so that's an obvious solution, although it's getting more digitized. You know, the challenge is, though, that regulators are also asking banks to not only be the police of what's going through the payment system, they're also asking, as we talked about, the sophistication. So it used to be, you know, there was a black and white difference between tax evasion and tax avoidance. You know, one's allowable, one's not. Now, banks are being required to report anything which is an aggressive tax planning scheme, which completely changes it, because the view is that tax planning schemes are linked to financial crime. So the role that being expected of banks in policing this is going up. And the challenge is the sophistication, as Kevin and Niraj have talked about, the sophistication of the criminals is growing faster than the system can catch up. So any comment on the challenge for regulators? You know, it's not often we're sympathetic to regulators from a banking point of view, but Niraj, Kevin, Viren, any comment about the role of regulators in this?
I would say that we have the banking regulator, the Bank of Mauritius, and obviously increasingly there is this proximity with the Financial Services Commission nowadays. So, you know, there is this debate about Twin Peaks. There is obviously the possibility of collaboration, of sharing of information. So I think this is where we as a jurisdiction are heading, where we have to be able to aggregate more and more information at a national level. That will obviously directly impact how effective we are in our AML CFT regime. So this framework that we are having locally, I think the dialogue between the licensees and the licensor, I think, happens very well. What we would hope is that we are able to move maybe faster. The argument maybe is that, you know, we would never probably move fast enough because we're always playing a catch up. But that's the reality of the world we work in, and what we try to do is, you know, I think the collaboration element is key in all that we have been discussing today.
Kevin and Viren, do you want to add to that?
I'll just add is that, as Kevin mentioned, I think FinTech will play a great role, basically in trying to solve these issues. You will see today that the regulators, whether on the central bank side or on the FSC side, electronic money would be something that will come and would be a part of it will be from FSC and part of it will be from the central bank. And this is where I think, as you mentioned, Niraj, the collaboration between the FSC and the central bank is very much important there. In terms of technology, I would say, yes, the FinTech will contribute quite a lot in that perspective.
Anything to add, Kevin?
Yeah, so from my perspective, and we have an exposure on the African continent as well from an AMSA perspective. So what I can share is that, you know, it's the regulators are maturing on a daily basis. So they have a collaboration with other regulators within the African countries. And I can tell you that our regulator is not over-regulating what many of us tend to think. Regulators, especially in the African market, are working together, ensuring that they are converging in terms of the requirements, of the new regulatory requirements. So if I take the example of you know, the South African Central Bank, so their regulations are even more stringent that we have in Mauritius. And being in a multinational company, also banking or doing business in Africa, we have to abide to those regulations. So it is a difficult, I would say, challenge to ensure that we are complying to all these, but I think it's done for a good cause. And if you look at all the things that we have been able to prevent or to detect from a regulatory perspective in the last 3 to 4 years, I think it's great. Where I think we need to have a bit of more focus is if you look, for example, at our Banking Act, it's dated 2004 and it's 16 years old already. And you know, banking and finance is one of the pillars in Mauritius. So it is something that I believe the central bank, for example, needs to relook at. They have been doing, you know, issuing guidelines, a number of guidelines to add to the new regulations. But I think the Banking Act itself needs to be reviewed in terms of, you know, the new risk that we mentioned, and especially the cryptocurrency and the new identified gaps, whether it's from a wallet perspective or whether it's from a lending perspective. So focus needs to be put in there. But in the meantime, financial sectors need to ensure that they have controls internally in place to identify any risk that may emerge there.
So let me add to that. In most countries, the problem is you have more than one regulator. You tend to have a regulator who looks on the prudential supervision of banks, and you have another regulator who looks after consumer protectionism as consumer. So criminals will exploit even that. And so part of the problem is the regulatory environment is fragmented as well. And so and that's why you get concerns about data sharing, because the consumer regulator will have a very different view than the prudential regulator. And actually, you need them to work together to be able to share data. And an FIU needs to be a government-set organization who works with both regulators. So that's a very immature, and that's even in the States. Even in the United States, you've got that fragmentation of regulation and connection to FIUs. And all of that gets exploited by the criminals and ends up in very few prosecutions. So that's a world which has got to evolve to make all of the work that's being done at the moment by banks, and banks have got their own challenge, to be effective. But also, as I mentioned earlier, it's the breadth of regulation. So, estate agents in the UK now have to have a compliance team for all houses sold over £2 million for source of wealth. How many reports have been written on the horse racing industry in Mauritius, and what has been done to regulate it? These are big questions because it leads fragmentation to the system, which gets exploited. I'd like to ask the panelists one other question. To what extent are you being challenged in your relationship with correspondent banks and facing exclusion from the global financial system as a result of this? Maybe Neeraj first, and then Kevin and Liran can add their views.
Well, obviously well, I don't like to use the word blacklisting, but yeah, we have
blacklisting in Europe.
We have been taxed as a non-compliant tax jurisdiction. So I think that the impact it has as an industry definitely gets felt. We have, I think, as a jurisdiction, a very nice response because we kind of take it together to be able to come up with a national solution, if I can refer to it in this way, because we're not here at competing interests. We have common interests, and therefore I think that jurisdictionally, I think what the regulators are trying to do in trying to improve our image, especially in light of the recent listing of Mauritius by the EU, is something that we follow closely, and we try to work towards resolving it.
Kevin, any thoughts on that?
So from my perspective is that, ABSA being a multinational bank, we have a number of businesses with correspondent banks and also in the offshore sector. So definitely we have seen some impacts there when we have been part of the blacklisting. And but the good thing is that we've done a number of progress from a country perspective, from a regulatory perspective. We've done a lot to rectify those issues. So we are hopeful that by early next year or by most June next year, we should be out of that blacklist. Having said that, is that with the blacklisting, we've seen also some more stringent views from our regulators, because I think that was one of the items as part of the findings. So that also is could be seen as a good thing. But from a banking perspective, it is even more difficult now to ensure that we have all the all the artifacts in place to ensure we are complying to those regulations. So it is something that has impacted banking sector for sure, but we are hopeful it is done for a better future.
Liran, final word to you.
My point of view, Mike, on this one, I think everything is put into question today, right? What happened with the Fincen Leaks, I think even the intermediary banks are at stake today. So in terms of the traditional way of doing business, everything is put into question, right? The way things are going. You mentioned about certain countries today are unable to do banking. They are unable to be included in the financial perspective. So everything is put at stake. So I think the whole world needs to be reinvented. And this is where FinTech and RegTech is coming to come and complete and leverage that issue that we are having today. And when we talk about wiring today, everybody needs a wiring immediately, instantly today. So how to make this something that is compliant, something that is legal? So these are the things the questions that we are asking today. And this is where FinTech are coming into picture. Challenger banks are coming into picture. And this is where I feel that the intermediary banks today there are lots of questions about them today.
Okay. So I need to wrap up here, but I will give you some anecdotal information. I've talked to friends and relatives in the US and Europe in the last 3 months who have been unable to remit money back to Mauritius because their banks refuse to deal with their correspondent banks. That's the reality. And the other reality is, unfortunately, geopolitical sanctions and political sanctions fall into the gambit of the area we're talking about. And the challenges from a geopolitical world and the use of sanctions make all of this more difficult, but actually accelerate the sophistication of how to avoid sanctions as well. So huge subject, and maybe we'll need to revisit this subject on a 6-month or annual basis, because the one thing I know is it's not going away. So let me thank the panelists for their contribution. I hope that it's brought some insight to all of you about this challenging world. And thank you for your attention, and hand back to Lisa.
Thank you so much, Mike, and thank you to all of today's panelists, Neeraj, Viren, and Kevin, for your interesting discussion points and insights today. I would like to also thank all of our attendees for coming today. And I hope that you will be able to join us again in the future, future MAF events. Please do subscribe to our social media channels and visit our website to learn more about what's coming up. We always have something going on, so please do join us at our next event. And I look forward to seeing you there. So thank you so much for joining us today.